So in most cases, my client cares about is how this kind of the claiming how a home office expenses can be used for the actors. Um, Actually, it is a similar like employee, but slightly different. Um, it also can be used as a two method, the flat rate method and the cost method. So the first one is currently the HMRC allows a flat £4 per week or the £18 per month fixed expenses, which can be claimed back from the company without need of any receipts. So this is the flat rate, but the flat rate excluding the business telephone call. Business telephone call has a little bit special because it can be deducted 100% because it's business usage wholly and exclusively. So this can be apart from this flat rate. Means that you can claim the flat rate and at the same time you also can claim back the business telephone call usage. Yeah, this is the flat rate method. But most of you may be not interested about the flat rate because this is not tax efficiency. So you maybe want to use to reclaiming the costs by the cost method. So yeah, you can claim back a lot of elements. For example, the cost of powers, the cost of electricity, telephone bills, etc., etc. You're able to claiming for the extra cost or the incremental cost of this element as well. For example, the lighting and heating, the home base for the home base workplace, the business phone calls, incremental of the business phone calls, and the dedicated business broadband service, etc., etc. Especially during the pandemic, the bills increased dramatically by more time you spend at home, right? So you could use this cost, this incremental cost, as the deductible cost and claim back from your company. So yes, but before that, you need to work out the proportion of the household cost used by the business. For example, how much used for the lighting and heating, right? And you need to calculate how long each day the service is used for the solely business reason. So yeah. And there are some different rules when you. I'm sorry, I heard someone raise the hand, but if you want to raise any questions, you could welcome you to use the Q&A facility to list your question in there, and I will get back to you after the webinar finish. There are Q&A times, no worries about it. So let's continue. The reclaiming of the cost, rent, and mortgage interest is straight different from the self-employed. I would like to highlight in here. The first is the director cannot claim back any proportion of rent or mortgage interest or council tax from their company. Why? Because this cost would have been paid personally anyway. So it cannot be deductible, cannot be claimed back. It's not applicable. Instead, there is a way the limited company directors can charge the company rent as a proportion of the rent of the mortgage interest paid by the household. However, this rent income must be disclosed on annual self-assessment form, and formal contract would need to exist to cover this rental agreement. And also, the rental income, the rental amount, should be at the market value. You have to be reasonable, right? You can't charge the huge amount, even though you're the director of the company, right? So yeah, this is the case. This is slightly different for the cost of the rent and the mortgage interest, apart from the director, from the self-employed. So yeah, let's see an example to see how it works. So then again. It is all the same from the previous example. The only difference is he is now running his business as a limited company, and rented the room in his house for 60 hours to his company for 7 days a week, and he charged 200 per month. So the first point is Dan can get 2,400 per annum as the rental income, and he has the obligation to report this amount to in self-assessment report. But this 2,400 is not the final number, because there are some related expenses could be deducted from this 2,400. And how much is this? So let's copy the numbers from the previous example if you still remember. The total cost is £8,000 per month. And as you can get from this example, he rent out the room for business use for 16 hours out of 24 hours a day for 7 days a week. So it's 16 out of 24 as a proportion of the business usage. And the floor area is how much? Is 20%. So times 20% again. So the annual total cost for business usage, which can be deducted from the tax profit, is 1,067. So Dan can deduct this 1,067 from his rental income, 2,400. So means that there are 1,333 amount is taxed, is subjected to the tax as the rental income for Dan. Means that he need to report this 1,333 as the total final number in his self-assessment rental income column. Or there are other way you can see in here, because there's no mystery of my PPT now. You can see straight away in here that the property trading allowance is 1,000. So you can easily calculate it, deduct from 2,400. So the taxable amount becomes 1,400. Yeah. So I also illustrate the property trading allowance and other similar allowance in my previous webinar. If you missed that and you need to discuss it, you can email me. I won't expand this topic in here today's webinar. So yeah, this is a very